Hello and welcome to the Economic Times Rising Bharat Summit, where you will find a lot of comprehensive discussions on what to expect from the upcoming budget. To know what the startup community and the venture capital community is looking for from the budget, we have with us Mr. Prashant Prakash, founding partner at venture fund Axel. Mr. Prakash, thank you so much for joining us. And the last budget was referred to often as the budget for digital India. It had a lot of references for startups, tech, digital India, etc. What are your expectations from this budget before we come to the specific points on taxation, etc.? Just wanted to understand what is your wish list from this budget.
Mugdha, thank you for having this discussion with me. It's a pleasure to be here with you. So we have two large kind of pillars of what we are enabling here today. One is that we have become a startup nation, and we are one of the global startup hubs, and arguably in terms of numbers, probably the largest, right? So that's on one end. The second part is the capital that needs to fuel the startup ecosystem, right? So that pillar, we had largely FDI or of a global investor-oriented ecosystem. In the last few years, there are the AIFs, and there is some amount of domestic capital that has come into play. Now, I think that's the kind of the background. But really, what we need to do is put both of these on steroids, right? So we really need, while the last time's budget, like you said, showed a lot of intention and some real good directional support too. I think in a lot of these areas, both for the startups and for investors, this is a 3, 4, 5-year journey, right? To become really a scaled ecosystem, both in terms of the capital we can provide for our startups and the number of startups that can themselves get enough capital to scale. So I don't see this as like a one budget thing. I hope that there is a continued trend in this budget and hopefully the next one, where some of these get more support and some of these are slightly nuanced things, right? While announcements are made and initiatives are, things take time to kind of get through the legal and the regulatory frameworks, really enabling stuff on the ground. So that's a little bit what we can talk about, where some of these initiatives have begun well. Now, how can we kind of provide them more support, boost them, and really accelerate some of them?
But like you said, let's come to the nuances of what we can expect from the budget. And of course, taxation is one of the most important focus areas in the budget. And, it has been an ask from the startup and the venture capital community for a long time that there should be some kind of a tax parity when it comes to listed and unlisted shares.
Yes.
And last year, we did see that the government did cap the surcharge.
Yeah, so we got some parity on the surcharge, yes.
Yeah, they put at least a cap on the surcharge on all long-term capital gain on all asset classes. But there is still a disparity between how the listed and unlisted shares are taxed. If you can tell us what the venture capital world currently needs and what this disparity how this disparity is affected in terms of investments in startups.
So let's look at the macro picture. What is driving our economy, right? So today we say by 2027, we want to be a $5 trillion economy. Now, what is the engine for this $5 trillion economy? What do we really want to support to really create more jobs for the literate people, more innovation-led growth, more structural, digitization of our B2B ecosystem, our supply chains, being able to support global Make in India for the rest of the world kind of initiatives. For all of this, we need more capital in the ecosystem, right? And today, there is a differential in the equity classes, like you mentioned. And I don't think it is because I think it's historical. I think the time when some of these were framed, the private equity ecosystem was small. I mean, if you take 10 years ago, right, the influence that startups had and the contribution of startups to the economy was was very small, was marginal. But I think it's really that there's been this transformation, there's been this really big change, which I think will take a little bit of time for everybody in the government and in the tax departments, everybody to recognize and actually accept and say, yes, if we have to continue to have our economy grow at the scale it has to grow, then we have to support private investments into companies, right? Why not allow capital gains exemptions when if you can invest into startups, right? And this could be in very early stage startups. It's not that we are saying, give capital gains exemptions for investing in companies that would anyway raise money at very late stages. But can we encourage people who are selling their equity, who are selling their real estate, to invest into into the startup ecosystem? So this is a new thing that I'm just also suggesting. And then finally, on the tax side, tax breaks for the innovation part of our ecosystem. Right now, a lot of the tax breaks are for R&D in pure science. And pure science is, of course, there's a lot of labs, there's a lot of innovation that's happening, research in academia, but there is a lot of investments in emerging areas such as AI, ML, generative AI now, in maybe some aspects of the climate tech ecosystem, where new materials are being engineered by startups. So I think there is probably also a need to recognize that startups would also invest into R&D, invest into new product development, and it would be useful to see if there could be some tax breaks for R&D, which is outside of the current labs and the academia, but happening with the startup ecosystem. Finally, on the tax side, there are some things that are just about ease of doing business, which so today, if you have to make investments into India, it takes still a little bit of regulatory hoops to really make it happen, and that's because you have to comply to RBI, MCA, the income tax department, and all of them have different ways in which they look at valuations of companies. Similarly, I think there has been a little bit of a challenge in getting the income tax authorities and some of the other authorities to understand that startups need to have a low friction environment. And this is, we can talk more about it later, but this is the whole thing about this whole stay in India kind of thing. But getting domestic onshoring of more companies and domestic onshoring of funds would require lowering and easing some of the current frictions that continue to exist because of the newness of the ecosystem and the startup as an entity in most government departments.
No, absolutely. You actually mentioned stay in India. You talked about how there should be domestic onshoring of startups, VC funds, etc. There has always been this gap between the fact that there isn't as much domestic capital coming into startups, right? A lot of the capital that startups are raising is foreign capital. And what is the push needed to encourage more domestic capital to come into startups? And how can the government encourage and allow banks and insurance companies, etc., to also invest into AIFs that can then fund startups?
So it's a little bit of an education challenge that we are facing. while the higher level intent is all fine, higher level guidance, I'm sure, has been given at different levels. But I think that there is still it's taking time for it to percolate down, and some of these more finer aspects we hope will get addressed by the expert committee that I'm sure you're aware of, the VCP expert committee that got
Right,
formed.
the Damodaran committee.
Damodaran. So all of these have been represented there in very, very great detail. So we are hoping that some of these will make it to the current budget. The taxation of AIFs, the pass-through for expenses in AIFs. So while we want to enable more investments from insurance companies, banks, and so on, where again there has been an enabling provision that was announced, and but again the problem is, as an equity class, it is new for most of these institutions, and they need to build an entirely new capacity within their organizations to be able to handle these fund of fund type investments, and being able to pick the right managing partners and GPs and make the right kind of investment. So I think that process has started. I think SBI is for example, starting to build a whole kind of structure around supporting the private equity and the startup ecosystem, and including the investing into funds. So I think a little bit of work still on encouraging AIFs in the country by making the tax regime friendly and making sure they don't get slapped with new surprises on the taxation front and other hurdles. And the second part is, while there is an intent in these public sector organizations, how do we build capacity within those organizations to get comfortable with this as an asset class? And this is again an area where IVCA is engaging the insurance regulators, the insurance providers, and the banks very closely to help them understand this as an asset class and help them understand the opportunity and the value of investing into these funds.
Absolutely. And one ask of the startup world over the last few years has been that they be allowed to list directly outside. And while the government has seemed to have acknowledged this need, there hasn't been any concrete measure taken to enable this. What are your thoughts on this? Of course, right now, the whole IPO scenario itself is very different than what it was, say, in 2021. Startups are, in fact, withdrawing their IPO plans, but generally, startups have sought this direct listing. What do you think the government can do here?
I think there are some tax-related specific challenges, I guess, that still didn't get worked out. I mean, I think there was an intent to do it, and then the last tying up of the details didn't happen, right? So, like you might have heard, there were multiple announcements that it's going to happen in this budget. But I think I see a new dynamic now, right? So listing in India has also become very attractive. So valuations for companies in India and the scale of the companies that you can take IPO in India seems to be more favoring the listing in India versus listing abroad. So I think what we should look at is broadly even the reverse. If a company is domiciled in Singapore or in the US, why can't that company choose to list in India, right? So, because things can change, right? And it's also specific to specific types of companies, right? A SaaS company may, at a certain scale, choose to directly list in the US. a SaaS company which is not domiciled in India at a certain smaller scale might choose to list in India. So we are saying make our stock market, I mean, the entire stock market framework equivalent to some of the global stock markets that exist, where you can do listings both ways. So that's one part of it. The second part of it is, I think it has not been great with some of our startups where they've not shown profits at the right time, and because of which there have been some reputational loss for startups listing which have good growth but don't have a bottom line to show for. So I think SEBI has been looking at introducing certain regulations where they want you to disclose certain KPIs early on and link those KPIs to valuation. But I think a lot of that, I think, is a little bit knee-jerk. I think there needs to be a more thought-through process for who gets through the gate, and how would, more consultations to build transparency on valuations. What's the right valuation? Who do we kind of recognize at what value? Is KPIs the right mechanism, and what kind of KPIs can we have a more detailed consultation on that? I think these are things, again, at IBCA we are working with the regulator, as in SEBI in this case, to make sure that we don't swing totally to the other end and just make it very difficult for startups to list in India also.
Lastly, Mr. Prakash, I just wanted to ask you, 2022 was a tough year for startups, at least compared to what we saw in 2021. What is your forecast for 2023? Of course, we hope to see some push from the government in the budget and outside of the budget as well. But what is your forecast for 2023?
Now, in terms of what more can we do to kind of fuel these startup funding, and which have been handicapped to some extent, right, because of the reduction in global flow of capital. There's a lot of uncertainty globally and in the US stock market for sure, and hedge funds have pulled back quite a bit. So I think the fund of fund announcements in the last budget of the 10,000 crores, I think if we can operationalize that quickly for emerging sectors. What you don't want is that the new innovative sectors don't get funded, whether it's emerging deep tech sectors, space tech, climate tech, health, pharma. So you want to see some of the activity in the early stage. While there will be support, there is enough dry powder in the ecosystem. So the good news is, even from the private funds, the existing private funds that have raised large amounts of money, there will be enough activity in the ecosystem. But I think these enabling these blended fund of funds that were announced for emerging sectors quickly, and I think one of them, the Agri-Tech Fund through NABARD, is in the last stages. We're hoping that will get launched. I've been working with NABARD and the Agri Department closely, the Agri Secretary, through IVCA. But many of these other funds needs to be operationalized and need to get off the ground to support both domestic venture funds. Going back to your earlier point, what can we do to support domestic venture funds? I think it is we just have now the SIDBI fund of fund scheme, right? So by having these multiple blended fund of funds enabled, we can augment the capital that is going into the AIFs and the domestic pools of capital, in addition to the dry powder that there is. So I think this largely takes care of the early to even maybe a series up to a Series B type of investment environment in the country. But I think later stage will be slightly muted. I think the global, there are not that many But there is one good trend that we are seeing, and we saw a little bit of that this year. The domestic PE funds who had stayed away from investing in the tech-related startups and who were on the sidelines when a lot of the global hedge funds were very active in India, and they believed the valuations did not justify them to look at it. I think they are starting to enter the market. So the domestic PE funds, I'm hoping, would recognize that in the current environment, with hopefully better valuations and with the startups more focused on profitability, even before they can tap the IPO markets, you will see more activity with the PE. So more dry powder starting to get deployed this year in the early stages, more fund-of-fund enablement to fuel domestic AIFs, and third, PE investors hopefully participating more in the later stage rounds, and as a whole, making up for the global paucity of funds and the hedge funds kind of retreating a bit.
That's an interesting point. I think that could be the trend to watch this year, whether the domestic PE funds actually come to the aid of the late stage, in fact, the startups, which may not have as much capital like they did earlier from... and of course, there's dry powder, like you said, for early stage startups. Right. So hopefully, hopefully these trends will play out.
And one interesting trend, I don't know if, and Mugdha, you've been watching it, I think there have been a significant number of early stage funds in the 100 to 150 million that have got launched outside of these large established venture funds. There are, to my knowledge and record that I've seen, I think just in the last year, about 700 to 200 million kind of new pools of capital have been raised in India. So this augurs well for sustained entrepreneurship. And finally, I will also mention that this will be the year where the Bharat investment theses will come into full bloom, and you will see a lot more investments in opportunities beyond tier 1, tier 2 cities, because I think the digitization of Bharat, or the smartphone access and the financial enablement of the broader ecosystem, of the broader tier 3, 4, 5 cities is all kind of complete. And I think you will see a new impetus into funding, beyond urban India kind of use cases, getting a lot more attention and primacy.
Absolutely. Mr. Prakash, thank you so much for that very optimistic outlook as well for 2023. And now let's see what the budget holds for the startup and the venture capital community. Thank you so much for joining us.
Thank you, Budya. It was a pleasure.
Hello and welcome to the Economic Times Rising Bharat Summit. We have the most comprehensive deliberations on the Union Budget. Thank you, panelists Karthik Reddy, Satish Andra, and Abhishek Bansal for joining us today. We are very happy to have you in the startup track of ET Rising Bharat Summit. You represent one of the most vibrant parts of the economy, the startup sector. Billions of dollars of venture capital have come into this sector in the past decade and a half. Startups have created hundreds of thousands of jobs, new services, and innovations. We are on course to have 100,000 startups, and 100 of them have turned out to be unicorns. And startups have collectively raised nearly $100 billion private capital in the past 10 years or so. And more importantly, they employed nearly 1 million people. But as we speak, this sunrise sector is going through a funding winter right now. we have entered into a bearish investment cycle where the risk appetite is low and the cost of capital has become high. In this context, the startup and venture capital community might look for some kind of a systemic support in terms of the policy framework, in terms of incentives. Let us go across to our panelists. We have leading venture capitalists, Karthik Reddy of Bloom Ventures, Satish Andra of India Partners, and founder of a Sunicorn startup, Abhishek Bansal of Shadowfax. Thank you once again for joining us. I'll first go to Karthik. Karthik, you are the chairperson of Indian Venture Capital Association too. Are there specific pain points which the venture capital community would like to get addressed in this union budget?
So thanks for the opportunity, Manu. Thanks for having me. I don't know about the funding winter, but it's really cold up here in Delhi. And I think the dialogue between the industry and government has been on for 10 years, I would say. Early years, I don't think we were well understood, but there's been definitely a pickup in that understanding. And whether you look at the Prime Minister's efforts in branding Startup India, and whether the rest of the the associated bodies like DPIIT, etc., took this forward and created a momentum, this has been on a sort of a peak for the last 7 years. So I think it's the 7th anniversary of since Startup India got kicked off. And therefore, we get a lot of dialogue going. I'm not denying that opportunity at all. I would argue that prior to that, there wasn't even a dialogue. Yeah. The only correction I would make is that it has nothing to do with the funding winter. I don't think you're asking for concessions. I think that approach is incorrect, and it sort of diminishes the efforts of both the entrepreneurs and the venture industry. No one's asking for freebies in some sense. What we are asking for is that we look at regulation progressively to be able to look like world-class entrepreneurs and world-class venture capitalists, right? Because I don't think we are building in a vacuum. We might be building for India, we might be building Indian startups that are going globally, but we're building in a globally competitive environment. So most of the capital, as we know in venture, comes from overseas, both doubly so for the funds and somewhat true for even the underlying portfolio companies. So your benchmarks in terms of standards, governance, ease of doing business, capital coming in and going out of the country, terms that they get, have to be equal or better than the rest of the world. Can't be equal or worse. We haven't even reached equal, is my humble submission, right? And so if we reach equal, then we can say we've given the industry enough firepower to fight. And we are not realizing that that capital gets deflected to an American startup or a Chinese startup or an Israeli startup. It has nothing to do, there's no love for India, like specifically. Capital is very objective in the way it looks for returns. And so therefore, when you're competing for a global resource, then you have to be globally competitive. And I feel some of our regulations hold us back in that sense, right? So for example, if RBI has a view on overseas investments, the question is, are you hampering or enabling us to become competitive entrepreneurs globally, right? And is the Indian fund manager looking weaker or stronger in that context? If SEBI is setting certain regulations, do we as AIFs, I think Satish and me fall in that category, do we look uncompetitive relative to our peer who's 2 doors away, but who's not an AIF? He's Indian, sits here, but manages a fund which is not registered in India. And somehow he looks more competitive than me. So I have a problem with that. So fundamentally, that's all we're saying, right? We're not asking for freebies. We're not asking for concessions. We're saying it's 2023. If India needs to get to where it needs to, and you said 1 million jobs and you gave a lot of credit to the startup movement, I would say the reach is far, far, far wider. We don't need to directly employ people. We impact productivity of the country and the speed at which this economy can grow, far more than simply just the jobs and capital and value creation piece alone.
Yeah.
And so the trickle-down effects are massive, and by slowing us down, we are slowing that goal of 10 and 20 and $30 trillion, which is what we really need for an economy, a population of our size. And so enabling us is always seeking to build velocity, because we don't have too much time between now and that 2047 mark where we want to be one of the biggest and the best economies in the world. So thanks for hearing me out.
So this is more about regulations. So taking on from where what Karthik said about capital going in and out. So Satish, for every early stage fund, they need global capital, global fund houses to come and take their companies forward. So in that context, do you see regulations have to facilitate the inflow of global capital more than that currently is?
Yeah, Manu, again, good morning. Thanks for having me on this panel. Karthik and Abhishek, good to see you folks. So I think Karthik summed it up very nicely. This has nothing to do with, the funding recession or either fundraising for GPs or funding slowdown for startups. I think we're the third largest startup ecosystem. And if you really look at the events that have happened in the last couple of years, right? So pandemic is one piece. And then if you look at the geopolitical changes around the globe, and now our country's own march towards, that 5 trillion mark and eventually maybe a 10 trillion mark, startups and venture capital play a very pivotal role. Again, Karthik very nicely recapped in terms of the impact that startups have created. And you talked about it as well, whether it is in terms of, dollars, bringing in the dollars, job creation, direct, indirect taxes payment, and eventually the impact, especially, where you need to leapfrog, right, to take it to the next level. So to me, I think when the level playing field is kind of equal, obviously capital flows. Capital, chases the talent fundamentally. So if you can keep the level playing field the same for all the players, then obviously we're a country with immense talent. And, we can build for India, build for the region, and build for the globe, right? So when a late stage or a growth stage fund is really looking at opportunities, where to deploy the capital, irrespective of which sector, obviously, they will look at India. India is one of their top priorities. So now, I think just to double click on some of the things that Karthik kind of talked about, issues have been there for fund managers, issues have been there for startups. Simply, if you really look at from a startup perspective, I hope something like GIFT comes up for startups, right? So a GIFT is for funds now where, obviously your regulatory authority or your presence in GIFT could be as good as it is in Mauritius or in Singapore. Similarly, if there was an equivalent setup for startups, you don't need to go, register a company in Singapore or Delaware, right? Can you, obviously work on it? The other piece from a fund perspective, there are a set of issues, how you treat the ownership of equity in a private company versus a public company, then treatment of even, kind of the carry, the GST, as well as treating it as an income from a tax perspective. I mean, these are issues. But attracting growth capital, I think to me, if you are transparent, if you give that visibility, and if you make, all of them look competitive, capital will follow. And I don't see that as a big deal. I think for every dollar the local managers would invest, $25 could be brought in from, global pool is what I feel.
Okay, great. Abhishek, we see a lot of startup IPOs in the recent past, but still, the exit scenario, everyone still say, it is tough. So, are there more to be done in terms of, say, facilitating IPOs and M&As. So what's your take on that?
Thanks, Manu, for having me here and being part of this conversation. I think to start with, giving all the credit to the government and all the good work that has happened over the last couple of years. I think imagining tech companies doing an IPO maybe 3 years back was still something some of us were dreaming, like how would that eventually happen? Okay. I think where the government has played a very active role is modifying some of those rules, bringing in a lot of changes in the entire system to make it easier for companies to actually exit. And again, that's a separate question, how some of these IPOs have fared. I think that's more like a market phenomena about the global capital, the geopolitical changes that Satish and Karthik have been mentioning about. But overall, I think there's a lot of work that has been done, and it's a very iterative process as well, just discovering how to make the process more efficient. But I would say that, again, the government has been super supportive in creating the framework to make some of these things happen. Yeah. I think when it comes to M&As, still there is a lot more that can be done from a regulatory standpoint. Today, the way M&As happen, and especially if you look at it from a capital gains perspective, it's not tax efficient to actually do an M&A in this country, especially if you are a startup where you probably want to do an equity swap kind of a model. It is not tax efficient at all for the person who's getting acquired, and that's the reason probably it's not like the easiest of routes as well. Most of the large organizations, when they're doing an M&A, it's mostly a cash deal. You barely see consolidation happening with kind of an equity model because it's just not tax efficient. I think the M&A rules created for our country are probably not tailored well for some of the younger organizations, for some of the organizations which are still in a growth phase and looking to probably bring in more consolidation at a slightly more earlier stage than some of the larger ones. So I think there's a lot more to be done. There's a lot more debate that needs to happen around it. And I think that's one piece of thing we expect probably in the coming years to probably ease out for some of the younger stage companies. Over to you, Manu.
Yeah. So Karthik, both Karthik and Satish, so you guys have built homegrown funds basically. So coming to some of the issues on the domestic funds. So what is the limited partner landscape in the country looking like? So do you see there is more to be done to widen the LP base in the country? So what's your take, Karthik?
No, I think their investors are smart, whether it's domestic or international. They want us to deliver superior returns for the risk that they're taking. I think the conviction was not there in the early part of last decade. There seems to be massive momentum and belief both in the entrepreneurs like Abhishek and managers like us who backed them in the last 3-4 years. Right? We've been pleasantly surprised by the amount of demand we saw in the current fund. It is the first fund since Fund 1 where the percentage of Indian money shot up dramatically. And in absolute terms, because the fund size has grown a little, quite a bit rather, the dollar amount is massive. We've never raised more than $20 million in any fund from India, and this one will be close to 100 million, right? And so it shows that the appetite is there. It's our collective onus to show the money back to them. That's what they want to see. They also are a little impatient, so 10-year horizons are challenging. I think the fact that we've completed 8-10 years of track record, whether it was Satish through multiple avatars even before India, and with us now 10-12 years, there's a little bit of confidence that this is real. Paise wapas aata hai, and we see the capital back in the bank. So without that, I think they were very cynical. There's a lot more of the capital to come, and they're also very savvy and clever that they want to be able to play a shadow fax equivalent directly, right? They don't only want fund exposure. So they're theoretically good long-term partners to have in a market where we don't have depth of early stage capital. Even though the numbers have gone from 5-10 funds to 50-60 funds today, in absolute dollars, an LP can come and one of my LPs can come and put more money in one company than he's put in 4 of my funds put together. They have appetite. 20, 30, 40 crores. So now you're also creating a new investor archetype inside of India who's willing to take direct exposure in early stage companies. So that's important. You're not just bringing them in as LPs. They're coming in as co-investors selectively. Could be an area they understand very well. Somebody does only healthcare. Somebody does only manufacturing. Somebody's kid is only interested in robotics or gaming. It doesn't matter what the motivations are. It's all additional risk capital that is ready to come and back early stage startups. So what was a cute set of angel networks 15 years ago, limited to 200, 300, 400 people, is now 5,000-10,000 people, and of which there are maybe 500 solid family offices which can put tens of crores into a single business today. So that expansion and self-confidence is important, but they want to be treated same thing. They don't want to be treated. They don't want their startup investment to get secondary treatment, right? So they want capital gains to be on par. Right? It's not my motivation. What will I gain if they pay more taxes or less? Right? So, but if you tell the investor you have to pay more taxes because you invested in me, saying what kind of an asset are you, or what kind of a manager are you that you're not able to convince the government that this is silly, right? And so the onus then shifts to us to be able to make this on their behalf. I don't make money because his capital gains goes down. He makes money, right? And so, so all of this is the country has to understand that if we are building a revolution of startups to change the landscape, as Satish said, the right word is we are allowing the country to leapfrog on many counts, whether it's better e-commerce, better education infrastructure, better healthcare infrastructure, all digitally built. And if you're able to do that, then this is a small price to pay. You know, if you're a $10 trillion economy, your tax receipts are 4 times higher any which way. So what's the problem? Right? And so worrying about a few tens of crores that go into an AIF and like penny pinching on what capital gains you might lose out in the 11th and 12th year of that in 2036 is just, you know, absurdly short-sighted. So I think the minute you signal that, even more money will come from domestic quarters.
Okay, great. Switching track here slightly. So Satish, when it comes to say some of the niches of startups, say clean tech or renewables or deep tech, so these are IP driven, R&D heavy, takes a lot of time to develop. So here maybe the venture capital style of investment might not be best suited in many of those cases. So but I think so we need to develop these ecosystems. So do you see of course the government has been playing some role, so do you see are there more to be done in such areas?
Yeah, so Manu, I think definitely one needs to catalyze the ecosystem to begin with, right? So some efforts have taken place in that direction. If you look at semiconductors, the whole EDF fund was to encourage electronics, right, within the country. And likewise, if you look at biotechnology, again, science-led, innovation-led, a lot of startups that have, we know we went through the pandemic, I mean, Bharat Biotech or Covaxin, right? If you look at saved, one of the vaccines that saved the country. I mean, it was a local innovation, right? Maybe lagging few months behind the global majors, but still obviously helped the country, right? Definitely navigate through very difficult circumstances. So I think in certain emerging technology areas, it could be, sustainability, it could be, blockchain infrastructure, to initially get the ecosystem, off the ground. Certain initiatives would be necessary. But I go back to what Karthik said, right? I think, if an entrepreneur is really smart and, they'll attract capital. I mean, whether it's local capital or global capital, I believe, while all the nations around the world are, focusing more on local supply chains and building the walls around nations, a smart entrepreneur goes and raises capital where he gets a premium, builds the product, sells where there is market, exits where he gets the best multiple. I think nothing stops them from doing that. So it's incumbent on folks like us, me, Karthik, and others, let's say, who back those companies, and entrepreneurs like Abhishek and others, to make those successful and create playbooks to attract more capital. But to jumpstart initially, yes, certain initiatives, certain risk capital would be very, very helpful. Ecosystem should not completely depend on that, but that's very beneficial and helpful in my perspective.
Okay. Yeah. So, Abhishek, okay, whether we like it or not, so I think even we ourselves had quite a number of mention about the funding winter. So no startup conversation goes without, a few mentions of funding winter. So that's the reality. So in this situation of fund crunch, do you see government and the PSU banks can do something to address the working capital requirement of startups?
Again, don't want to sound short-sighted or whatever in this conversation. I don't think funding winter is what is really bothering. I mean, it might be bothering a few set of sector spaces, but see, these kind of terms keep on coming and going. It comes like we've been in the business for 8 years now. We've seen this like coming twice. Like this is the second major downturn that the market is going through, at least in our journey. And what we have seen is that it happens every 5 years. Okay, there is a market correction that should happen every few years, just so that basically things get back on track. The cost of capital, the return on what you are offering gets normalized for the investors, for the founders, and it's a cycle. I won't be too worried and too short term about any knee-jerk reactions that any banks or anyone basically needs, nor are we looking for any kind of freebies out there, as Karthik mentioned. And I think, see, this is a phase that will pass as well. It'll probably last 6 months, 12 months, who knows? But it is something that will pass through. I think the good thing, especially about India, unlike some of the other geographies, is that the consumption patterns are not getting worried. I think the way a government played from a financial policy standpoint in the COVID times, I think that is showing some of the outcomes right now, where the consumption pattern, we are not seeing any consumption going down in the Indian market. I think the stock market is holding up. So I think it's just a matter of time when probably some of these things are going to get resolved. Again, the valuation correction is something that should have happened maybe 6 months back. That's happening now, but I don't think there is a dearth of capital if you price your product right, if you price your company right. If you're looking for some of the overvalued number, probably 12 months back, I mean, that's not going to happen now. So I think that's the only bit of correction that has happened over here. I think from PSU side, from a financing side, I think there are some long-term changes which are due, which should happen ideally, keeping in mind some of the younger organizations like us. And what is the capital needs, how to reduce the cost of capital, or even play at a very different risk profile. And I'll give you a very simple example. I think there is one industry which is a completely private lending today, okay, and it has like just mushroomed in the last decade or so, and we all call it venture debt. Okay, it's a separate industry where maybe even some of the banks are getting exposed through some of the private players. But that's an industry which has completely disrupted the way lending happens to startups. Okay, and it's pretty expensive to take venture debt. I think younger organizations are made to take venture debt because that's the best source of debt at an early stage. But the question is, can't the PSU banks enter into that space? Can you not bridge the gap between a very high cost debt capital by providing a slightly lower cost capital and solving that problem at a much, much larger scale for startups? And we feel that probably in the next 4 to 5 years, I think that's a space where there's going to be a lot of changes. I think the way anyone needs to look at a startup is very, very different than you want to probably look at an organization which is public, which has probably a track record of profitability over the last few years. And I think some of those changes have not yet happened in our banking system. If you talk to banks, they still look at some of the old norms of doing business, which was probably existing 10 years back. But I think the industry has changed. And especially if you look at venture debt, I think that's a space which has defined certain rule books into the system. And those are some of the companies who are generating actually huge amount of return for their investors as well. So I think banks and some of the government holded organizations can take a leaf out of that book, create a simplistic where they can create a much, much larger impact and probably bring down the cost of capital for the startups.
Yeah, thank you. Quite a few measures that startups and venture capital community are looking forward to. With that, we are coming to an end of this edition of ET Rising Bharat Summit. Do not forget to check out our website. We have many such interesting sessions on our website. Thank you, gentlemen, once again. Thank you very much.